Silver has now fallen from $120 to $67, a drop of $53 per ounce. That kind of decline almost never shows up unless a major reset is unfolding. The market just went through a significant change, and it may be signaling another move ahead. A 44% pullback after a powerful surge doesn't happen under normal conditions. This kind of action usually shows up when silver climbs too aggressively, then snaps back and shakes confidence in the move. First, I will show you how silver's 25-year pattern of explosive rallies followed by sharp corrections explains what is happening right now. Next, I will break down how this drop fits past behavior. And stick with me until the end, because I'm going to explain how long-term demand could still push silver beyond its all-time high. Almost nobody is noticing that some of silver's biggest advances began after this kind of painful drawdown. When you look at the chart, it's easy to understand that, in plain English, silver did not fail. It surged upward, overheated, and then pulled back to a level where buyers and sellers are testing each other again. I need to pause briefly here. My analytics show that most of you watching this channel have not yet subscribed to this channel. Please take 2 seconds to hit that subscribe button. Help us beat the algorithm and get this information out there. Drop a number 1 in the comments if you think silver is going to increase in price this week. Drop a 2 if you think it will decrease. Let's get to it. Over the last 25 years, this pattern has repeated multiple times. Silver moves in bursts, not straight lines, and those bursts are often followed by drops large enough to shake confidence. A fall from $120 to $67 feels extreme, but historically, silver has always moved in waves rather than steady climbs. In 2011, silver surged to about $49 per ounce, and then spent years falling back. That decline was discouraging, but it did not erase the forces behind the rally. It showed the market had run ahead of itself and needed time to cool. The current drop follows the same logic. After a major rally, price retreats until excitement fades and the market finds a more stable level. A 44% correction sounds severe, but in silver, deep pullbacks are normal. This metal moves harder than gold in both directions. It rises faster and falls harder. That does not mean it is broken. It means it is highly reactive to shifts in confidence. Over time, sharp advances have often been followed by sharp reversals, and those who mistake the reversal for the end often miss what comes next. Technical behavior shows silver became stretched above its base. When price runs too quickly, it leaves weak support underneath. Once momentum fades, price can fall rapidly through those levels. That is why the drop felt sudden. The move up was powerful, but uneven, and that often leads to equally uneven declines. The area around $67 is important because it marks a shift in sentiment. At $120, confidence was high. At $67, doubt takes over. Many buyers who entered near the top are now down $20 to $40 per ounce, which creates selling pressure when price attempts to recover. That is why rebounds can take time. However, one key reason this may not be a dead end is demand. Silver demand today is broader than it was 25 years ago. It now includes industrial use, electronics, solar, and investment demand. That combination creates multiple sources of support that did not exist in the same way before. If demand had disappeared, this drop would tell a different story. But demand has not vanished. Instead, price ran too far and is now resetting. This disconnect between price action and underlying demand is what creates discouragement. Silver has always had a tendency to overshoot in both directions. The move from $120 to $67 is severe, but it also removes excess from the market. That reset can create a more stable base for future growth. The key question now is whether silver can stabilize and rebuild. It does not need to jump back to $120 immediately. It needs to hold support, build strength, and recover step by step. The reason stackers say this is a dead end is because the drop feels overwhelming. But over a 25-year period, silver has repeatedly gone through this exact process. A sharp correction does not mean the story is over. It often means the next phase has not started yet. The conclusion is simple. Silver's drop from $120 to $67 is severe, but it fits a long-standing pattern. The long-term demand remains strong, and history shows that these types of declines can come before major recoveries. What feels like the end may actually be part of the cycle.